You ever wonder how some traders seem to have a crystal ball? Like they know what the market's going to do before it actually happens? Well, they don't. What they're doing is reading something called price action. And today, we're going to pull back the curtain on 4 of their biggest secrets. Let's get into it. I mean, has this ever happened to you? You're staring at your screen and your favorite indicator finally flashes that big buy signal. You get excited, you look at the chart, and oh, the move already happened. The rocket has already left the launch pad. It is so frustrating. It's like trying to drive a car by looking only in the rearview mirror. Well, there's a really simple reason for that. Most of the popular indicators you hear about, yep, moving averages, the MACD, all of them, they're what we call lagging. They are built using past price data. So by their very definition, their signals are always a little, well, late to the party. Price action, on the other hand, is the total opposite. It's all about reading the chart as it unfolds, making decisions in real time instead of just reacting to what's already happened. So here's what we've got on tap today. We're going to unlock 4 super powerful secrets that the pros use every single day. First, we'll talk a little more about that problem with indicators. Then we get to the good stuff. Secret 1 is all about the stories hidden inside candlesticks. Secret 2 is the rubber band effect. Secret 3 is about reading momentum. And Secret 4, the power of pullbacks. And then, of course, we'll put it all together. All right, let's kick things off. Section 1, the problem with indicators. Let's really dig into this, right? Why do so many of us get trapped using these tools that are essentially stuck looking in the past? Okay, here's the bottom line. Indicators are just fancy math equations based on stuff that's already happened. And that means the signal to get into a trade, it almost always comes too late. Think about it. By the time your indicator gives you that green light, the smart money, the pros, they're already cashing out. Price action is what helps you get in with them, not trail behind them. All right, let's get to our first secret. This is where we really start building our new price action toolkit, and it all begins with candlesticks. Now, most traders, they get totally obsessed with the wicks, those little lines sticking out the top and bottom, but I'm telling you, the real story, the hidden message, is almost always found in the body of the candle itself. So let's look at a very specific pattern here. See this? A big, fat green candle with basically no wicks. Now, what's the big deal? Well, it's all about market psychology. This isn't just a price going up, it's a statement. It's shouting that buyers came in with so much force that the sellers were just steamrolled. They were so weak they couldn't even push the price down for a split second. This is pure, absolute control by the buyers. And this is where it gets really, really cool. This is how the past literally draws a line on your chart for the future. A candle like this carves out a super powerful support level. Think of it like a footprint in the sand. It tells you, hey, right here at this exact price, buyers went absolutely crazy. So what do you think is going to happen if the price drops back down to this spot? You can bet those same buyers are going to be waiting there to defend it. And check this out. Here is the payoff. So we mark that level from our big green candle, right? The price goes up, does its thing, and then eventually it comes all the way back down to test that exact level. And what happens? Boom, exactly what we thought would happen. Buyers rush back in, the price bounces off that level like it's a trampoline, and it just skyrockets. That is the power of reading the story that's hidden in the candle. All right, that was awesome. Let's move on to secret number 2. This one's a concept I really love because the analogy is so simple and powerful. I want you to think of the price like a rubber band, and its average price is like an anchor point. Now, the fancy technical term for this is mean reversion, but it's a really simple idea. No matter how far a price gets stretched away from its average, its mean, it almost always feels this gravitational pull to come back, just like a rubber band, right? You can stretch it pretty far, but eventually it's going to want to snap back to the center. Here's another great way to picture it. Think of a common indicator like the 50-day moving average, but think of it as a giant magnet. When the price gets stretched way, way above it, or way, way below it, that magnetic pull just gets stronger and stronger. It's basically screaming for the price to come back home. So how can you actually use this? Well, it's pretty straightforward. When you see the price just take a nosedive, stretching that rubber band way, way below its average, that can be your signal. The tension is building, and the odds are high that it's about to snap back, and snap back hard, to the upside. Okay, moving right along to secret number 3. So up until now, we've mostly talked about the direction of the price. Now we're going to talk about its speed.
This is all about learning to read momentum.
Momentum. It sounds complicated, but it's really just a word for how fast the price is moving. I like to think of it like driving a car. It's not just about the car moving forward. It's about what your foot is doing on the gas pedal. Are you pressing down harder? When you see momentum accelerate, when that price starts moving up faster and faster, that's a massive clue that more buyers are jumping in and the pressure is building. Yeah, take a look at this chart. You see how the price is just kind of drifting up? Nice and steady, and then bam, all of a sudden the angle of that climb gets way, way steeper. It's like a hiker who is just taking a casual stroll and then suddenly breaks into a full-on sprint up the mountain. That shift, that acceleration in speed, that's your signal. It tells you the trend is gaining a ton of power and a huge move could be right around the corner. All right, time for our fourth and final secret. Now, this one's a little more technical than the others, but trust me, it is one of the most powerful tools you can add to your arsenal. We're going to learn how to analyze those little dips that happen inside a big trend, or traders call pullbacks. You know, markets never, ever move in a perfectly straight line. They have to breathe. So in a big uptrend, the price moves up, and then it breathes out a little bit. That's your pullback. It's usually just some of the early buyers taking a little profit off the table. But here's the secret. The size of that pullback, how deep that breath is, tells you everything about how healthy and strong that trend really is. So, okay, how do we actually measure the breadth of the market? We use a tool called the Fibonacci retracement. Now, I know the name sounds super complicated, but don't worry, it is incredibly simple to use. Seriously, first, you just select the tool. Second, you click on the very bottom of a price move and drag it to the very top. And third, just to keep things simple, we're going to clean up the settings and only show these key levels you see here. And here is the beautiful part. Reading this thing is so simple. See all those lines? We are going to focus on just one of them, the 0.382 level. And here's the rule. It's this simple. If the price pulls back but manages to stay above that line, we call that a weak pullback. And that's an amazing sign for the bulls. But if it dips below that line, we call that a strong pullback. And that's a bit of a warning sign. So why is a weak pullback such a good thing? Well, think about what it means. The price shot up, but when it paused, almost nobody decided to sell and take profits. The buyers are just holding on tight. That shows massive conviction, right? It's a huge clue that once this little breather is over, the next leg up could be absolutely explosive. So, there you have it. We've just gone through 4 incredibly powerful price action secrets. But listen, the real magic, the real game changer, happens when you stop seeing these as 4 separate tricks and you start using them together as one complete toolkit. Let's just do a super quick recap. You now have the tools to read the market in real time. You know how to read the story in candlestick bodies to find support. You know how to watch for that snapback to the average. You can spot momentum when it starts to accelerate. And you can measure the strength of a trend using pullbacks. That is a serious upgrade. Look, any one of these secrets on its own can give you an edge, but the real aha moments, they come when you start stacking them together. I mean, just imagine finding a stock that's showing accelerating momentum, and then it has a super weak pullback. See? That's how you build a really high conviction A+ trading setup. So the only question I have for you is this: how are you going to combine these secrets in your next trade?